Over to you, sir.
Thank you. So here I just interesting one case study prepared, and we can all have a look on this. It is because of lack of information or lack of input credit properly, or vendors not filing it bills updated properly. The company lost almost 18 lakhs on account of time bar issue. So I'll just read out this case study slowly. You can understand. There's a company called Gamma Engineering Products operates a complex vendor network. They have around 600 plus suppliers across India. During 22-23, the company faced a critical compliance challenge when several vendors delaying their GST-1 return. This delay created a cascading effect. Input credit remained unreflected in the company's GSTR 2B. Despite having legitimate claim of 18.6 lakhs, ITC was ultimately lost due to Section 64 because of the time bar cutoff, because it's after November they put it. The incident highlighted systematic gaps in vendor management, reconciliation process, alert mechanism within an otherwise sophisticated SAP or S4 HANA and environment is not available. Next. Yeah. So what is the critical timelines? How it is missing the input credit? We start our audit preparation begins and finance team initiates vendor reconciliation process everything in March month. Here we can just for reference purpose I given this just for easy understanding. So at 23 March when they start all this process, April May communication will be sent to vendors requesting GSTR1 filings and copy challans and other things. And November 23 section 64 16.4 says deadline passes, reconciliation incomplete. So November 30 comes, there's no choice. We have to file the returns. We file returns quickly and without even completing our reconciliations. And December, we noticed that because of incomplete reconciliations, there's an input credit to the extent of 18.6 lakhs, which is permanently disallowed. Then in January 24, vendor files belated returns, credit reflected, post cutoff, and it's remained disallowed. I think one of the question is asked in this chat box is related to this. I hope this answers your question, sir. So if the input credit is filed after the due date, after the time bar date, even if the vendor files your data, then you will not be able to get any benefit on that because it's already time is over for that. Next. Yeah, for this we need to find out root cause and financial impact. See, for every problem, instead of hurry resolving the problem, initially it may take little more days, but you need to identify the root cause. That 18.6 lakhs, how we lost? What is the root cause for that? Are we having eco team to do the reconciliation? Are we having proper tools to do identify? Are we getting dashboard alerts? Are we getting proper vendors who are genuine vendors or are a compliance certified vendors who are thorough in their compliances? Or are we taking a compliance certificate from vendor? Are they filing their returns on time and everything? So these are root cause. We have to do the root cause analysis to identify the problem. Then you can work out on the plug-in into the problems. So one is vendor dependency risk. 12 key suppliers failed to file GST. In this company, there are 12 top company suppliers are there. All the 12 out of 22 or 23 suppliers, 12 failed to file their GST 1 within statutory timeline, creating downstream compliance failures. Missing alert mechanism, which is there's no dashboards, there's no alert system that there's a due date, you have to file the return like that. And inadequate reconciliation frequency, there's no either monthly or quarterly reconciliations. Only at the year end, we'll see what is total outcome, output, and total input, by match it, and then try to file the accounts. Later on, we come with these problems. And then weak cross-functional coordination. I think this is a very critical point for every organization. GST reconciliation is not just a taxation department and finance department responsibility. It is a combination of administration, procurement, HR, and the operational departments. Why I'm saying administration, HR, and procurement? Administration also works with many vendors like housekeeping materials, security, safety, all those things. And HR, they have a lot of service vendors, management recruitment teams, recruitment agencies, and other things. Procurement, they buy a lot of assets, goods, and other things, raw materials. So all these people has to follow up with their vendors and give the information to timely to finance, and then finance team in turn verify that on time for filing the returns. So the cross-functional coordination is very much needed. Here we need to add internal audit department is also a cross-functional department for verifying the activities before we file the returns. Next, please. Yeah. What is corrective framework now? One is process enhancements. Mostly GST or 2B reconciliation within 15 days, a month end, you have to keep a target. And then grading the vendors like ABC. And then ERP alerts of credits approaching 60 days credit period threshold, etc. CFO dashboard tracking pending credits and risk exposure in real time. And then policy and training related, as I said earlier, employee training is very much essential. GST cutoff calendar integrated with financial close procedures. In your table calendars, you have to mention, you have to monitor, like 7th is a due date for TDS, 21 is for GST. Similarly, you have to put up your reconciliation timelines also, and comprehensive training for the finance team members, and then clear escalation protocols. If somebody is not understood, they should not put everything under the carpet. They have to go to the next supervisor or next manager or the CFO levels to tell that I am not able to understand, I am not able to do this reconciliation, I need support. And documentation of time bar management best practices. So here we need to put up a documentation also every year, every quarter, how much we are supposed to get it, how much we are getting, why we are not able to avail 100% input credit. We have to put it in documentation process. And the last is governance review. Quarterly internal audit reports with the GST time bar risk, CFO's quarterly presentation to audit committee on the stress test results, board level visibility and the compliance matrix and vendor compliances performances, continuous monitoring and improvement cycles. See, improvement, there's no end. It's a continuous improvement. Any quality issues is we call as a continuous improvement. There is nothing there called there's 99% accuracy, either 100% or no 100% in compliances. You can say I'm compliant 99% my TDS payment. It means you have failed in your compliances. So there's no, in compliance is concerned, there's no 99.9, 98.99, either 100% or no. So we need to be very careful on this compliances part. Next. Yeah, after doing all this study and then your proactive checks and then your deep stick study of identifying root cause, how the transformation results and the learnings are coming. See, previously 83% ITC was recovery rate. Reduction is missing around 2.3 to 4.4%. And after doing that, reduction in missing ITC is from 2.3% to just 0.4%. And there's 74% improvement in vendor compliances. Earlier it was 19% to 5%. And there's an improvement in working capital 85%. Earlier there's an impact of 21 lakhs. It is now come to 3 lakhs. And then 100% in audit observations, completely eliminated from 4 observations to 0. So this is how you will get improvements. And this case study is really a practical case study where in one of the companies we did this, we achieved this exercise, and then we put, I just changed the name of the companies and percentages. Otherwise, this is a real, practically we have gone through this issue. And strategic learning in case of for manufacturing leaders, core financial control, GST time bar management must be treated as a fundamental financial control, not merely tax compliance function. It directly impacts working capital and profitability. So the taxation teams is not alone, or they are just sitting on corner of the company and only in the year ending they'll have work. Taxation is form part of finance department and they are form part of the working capital system also. If they don't do tax planning properly, it will have impact on their funds. And then monthly stress testing. Regular stress testing enables early detection of ITC risk. They materialize the financial losses, provide crucial lead time for corrective actions. And then, as I said, ERP integration is very much needed. Now with AI coming into focus, a lot of dependency on system, a lot of data is available. Only we need to validate what is right for us. For that, we need to have a knowledge, we need to have an experience. And then vendor governance. Robust vendor governance framework and dashboards protects liquidity and reporting accuracy. Here, what we need to is when we are selecting vendor, when you are giving a checklist to vendor, you need to ask their compliance certificate and every monthly. Are they filing their return properly on time? Whether all our invoices have been included in input credit or not. Nowadays, majority all major companies are following this, and they are giving back to their customers with a list of compliances. Next, please.